to Metals and Miners. I'm its founder and its host, Gary Bohm. We have a wonderful discussion lined up today. We're privileged to have with us Martin Armstrong, founder of Armstrong Economics. He's a developer of the Armstrong Economic Confidence Model, best known for calling the crash of 1987 to the very day. His most important view of the world is where boom-bust cycles occur like clockwork every 8.6 years. And what matters to him the most is his record as a forecaster. Martin, welcome to Metals and Miners, and thank you so much for joining us today.
Well, it's always a pleasure.
So let's jump in. The Trump administration wants to end the war in Ukraine and bring peace to the people of that land. The European powers, though, want to keep the war going, and they're doubling down. French President Macron came out and he essentially said, no, the war is going to keep going on. Other EU leaders, they're saying the same, and they're raising hundreds of billions of dollars to ensure it and even providing new weapons. Some believe that they want the $75 trillion worth of critical minerals that the Russian land possesses. In your analysis, why are the European powers wanting to keep the war going? And what do you expect next with these divergent actions between the U.S. and the EU?
Well, I think probably we should start with the fact that everything we hear about Ukraine has been nothing but propaganda. And anyhow, we started the war. I mean, there are videos of Victoria Nuland there during 2014 in the revolution handing out sandwiches. You had John McCain there on the stage saying, yes, overthrow your government. America stands behind you. I mean, can you imagine if somebody from China stood on the steps of Congress and said, yes, overthrow your government, we're with you? I mean, the arrogance or what we call the neocons is just off the charts, really. I mean, once we replaced that government, we stuck in an interim government which was not elected, and they were told to attack the Donbass. So we started the Civil War, and then you can look at, when Zelensky was elected, the death toll of Ukrainians was about 13,000. He promised to run on peace. He gets in there and the neocons get a hold of him and he basically sells out his country. The death toll now has exceeded 1.1 million.
And most of those are, young men.
Yeah.
I mean, they're just wiping out an entire generation of men.
Look, Europe doesn't care, all right? They're willing to fight to the last Romanian, Ukrainian, and Pole, and then they figure, okay, that will get Russia down, and then we'll step in. In all honesty, there has always been this resentment in Europe against America, that they were the pinnacle of the world economy, et cetera, and that they had to go begging for, help from us for World War I and II. And it's just the way they are. I mean, I've been, dealing in France for decades. I had to go, was called in by one of the top banks and told that, oh, you have to bring a translator. All right, fine. When you're in a financial meeting, translation is questionable sometimes because they don't know the terms. So a bull market turns into a meat market, so you have to be, mindful of what's going on. So, all right, I bring a translator, and then I had to stop her and correct her. And they looked at me and they said, oh, you know what she's saying? I said, well, I'm not a complete idiot, I'm not fluent, but I understand, financial terms and things of this nature. Then they dismiss her and the meeting takes place in English. I just did a report because I thought it was important. It's only like $9.95. It's just an account of basically where we are. All right. The neocons created Europe. After World War II, they were all bitterly hating each other. And so the CIA and our American neocons wanted it united as a buffer against Russia. The same way as Europe's using Eastern Europe today. All right. And the main contention was de Gaulle out of France. And they had to threaten to cut off the Marshall Plan. No more money. The same as Trump is doing to Ukraine, all right? He finally relented, and he said, all right, he'll accept in the Germans, but he wouldn't accept the British. They just hate, this hatred. It's all I can explain is that they feel that if Napoleon had won at Waterloo, the world would be speaking French. The English, the resentment between the two of them just goes back centuries. All right, so when they built the train through the tunnel under the channel, where did it connect in Britain? At Waterloo Station. Just to piss off the French. So these things have been going back and forth. So de Gaulle refused to allow the British into the EU. They joined only after he died. So these are the real facts. All right.
So what do you see as the next step here? Is the EU looking to broaden this war?
Oh, absolutely. Look, when they were forming the euro, we were basically foreign exchange specialists around the world, and very briefly, I guess I can explain that when we were going to open an office in Geneva, I knew there was this anti-Americanism there, and I had a list of European names and went to lunch with one of the heads of one of the top 3 banks, who was a client of ours. And I asked him, what name should we use? And he said to me, he says, name one European analyst. And I was embarrassed because I couldn't. And he laughed and he says, there are none. And he said to me, you don't know why everybody uses you. And I said, no. And he said, because you don't care if the dollar goes up or down. I said, it's just a trade. In Europe, and it's still this way today. All right. The politicians use the currency to validify their performance. So the Deutschmark's up 10%. That proves I did a good job. Vote for me. All right. So consequently, you did not find any analyst at any of the major institutions would be allowed to say, oh, gee, the Deutschmark's going to go down 20%. It was a political statement. So just as we've seen this, like COVID, this cancel culture type thing here, that has existed and still does in Europe financially. So you're not going to find any major analyst over there come out and say, oh, the euro is going to crash by 20%. The Deutsche Bank, the ECB will call on the phone and say, fire that guy. There was an economist in...
is that what you're expecting?
Yes. Look, when they came to me they were creating the euro. I explained how you create a currency. All right. They were putting out this propaganda. Everybody will pay the same interest rate like the United States. All right. And I said, look, that's not going to happen unless you consolidate the debts. You need a national debt. And Helmut Kohl was the Chancellor of Germany at the time. And he knew if he allowed the German people to vote on joining the euro, he even admitted he would have lost 7-3. So he took it in on an executive order. All right. And his criteria was no consolidation of the debt. And my meetings with them was in 1998. And I warned them this is not going to survive. And they said politically they just had to get the euro through. So they had this centralized power and they would worry about the debts later. And here we are almost 30 years later and they still haven't dealt with it. This is the problem. I warned them that unless you consolidate the debt, Europe will become like the United States, where we have 50 states, but they all pay different interest rates depending upon their credit rating. I said, that's what will happen in Europe. And any trader knows that, okay, fine, you moved the volatility from the currency, so I can't sell the Deutschmark and buy the lira or whatever. So now you just do it in the bond markets. So you get this disparity. Now, this is why Europe needs war, because the debt markets are collapsing. The way governments default when you're on these Ponzi schemes, the amount of debt doesn't really much matter. I mean, U.S., it could be 40 quadrillion. That's not the issue. The issue is when the line at the door stops buying. Okay, when that happens, then because you're in this Ponzi scheme, you're selling new debt to pay off the old. You just keep rolling it down. That's when it all comes crashing down. All right, it's when you lose that confidence that nobody's willing to buy your debt.
So are you saying that for Europe's sake, they're about right there?
Yes.
Right now.
Japan dumped like 50 billion last week. China's selling. The problem they have is they think if they get this 75 trillion in assets from Russia, that's twice the U.S. national debt. They will rise again to be the pinnacle of the earth. Right?
But it's just not going to be that easy to get access to that. Let's be honest.
No, exactly not. I mean,
so this is pie. So is this just pie in the sky, last ditch attempt before something completely crumbles?
Yeah, look, it's like the Democrats at Trump's speech. They all sit there with they all just talk to each other. Oh yeah, this is a good idea, and everybody goes, "What the hell are they doing?" And Europe's the same way. They just talk to each other.
Yeah. Okay. So Martin, whenever war is about to break out, money flees that land because if it stays, it could be taken over, it could be stolen, it could be confiscated, et cetera. Gold's been fleeing the EU in record amounts, coming to the U.S. U.S. gold imports, they have surged recently, exceeding past spikes that were seen during the pandemic, seen during the beginning of the Ukraine war. There's a lot of noise about why that's happening, but are you basically saying that money fleeing Europe coming over here is an alarm sounding that war is coming to the land of Europe?
Oh, yeah. I mean, I spent, a whole week talking to institutional clients throughout Europe. I mean, they all know what's coming. Look, the U.S. was basically bankrupt in 1896. That's when J.P. Morgan had to lend $100 million, all right, in gold. It was World War I and II that brought made the U.S. dollar the reserve currency. Because, when you're running around in war, blowing everything up, you move all the capital out. So we ended up with 76% of the world's official gold reserves by the end of World War II, all right? That's what's happening. Capital it's just getting the hell out of Europe. I mean, what will happen is if you just look at World War I, once that started, they immediately shut down all the stock markets. Even the U.S. went down for a while. Then they realized they should open up. But there will be capital controls.
So I don't mean to interrupt here, but it sounds almost like this will be a boon for the U.S. markets, for U.S.
Yes.
Assets in general. just as money flees Europe. It's going to come here to a safer place, to a more stable place, and that's going to elevate assets here.
Yes, I mean, you're seeing it already. You can look at the stock market and understand the three different indexes. NASDAQ is retail. All right. S&P 500 is more institutional. And the Dow tends to be more of the international big money. It's like when the Japanese came here, they bought Rockefeller Center. They didn't buy mom and pop houses for $200,000. They like the trophies. So when the Dow is leading all the way, that's showing you it's the big money coming here. When the NASDAQ is leading, that's more speculative, retail, domestic speculation. So Europe they need this war because, look, I mean, their monetary system is collapsing. The euro's never been able to be, challenge the dollar. If I'm a fund manager, I can pick up the phone and say, buy me $10 billion U.S. Treasuries. I can't do that with Europe. I still got to say, gee, what do I want? Do I want the bonds? Do I want France? You still got to make the same decision as before the euro.
So despite the euro being under all this pressure, the dollar has been going lower and hard assets have been going higher lately, Martin. So are we seeing the beginnings of a new global rebalancing between some financialized assets and real hard assets? Is that taking place?
Well, all your it's your tangible assets that make the transition through these types of things. Like when Germany collapsed, it wasn't, when they created a new currency in 1925, it was backed by real estate. All right. I'm here in Florida. I still get at least 3 phone calls a week. Gee, you want to sell your house? It hasn't changed down here. The traffic has doubled. And this is what you're looking at. I mean, there's a massive, we just published the statistics, huge, migration out of Canada to the United States now. So we tend to be, you look at World War I, World War II, I mean, if it wasn't for that, we'd probably all still be farmers, So international events definitely impact the domestic economy. And so you can't just look at things, oh, gee, what the Fed's going to do to us next week. It's more than that. And they start running around blowing each other up. All the money's coming here.
And that's what you're expecting to happen.
Yeah.
That's your highest probability forecast.
Yes, I would be very concerned from May on. They need war because this is the way governments function. They know they're in trouble. All right. If they don't come up with an external enemy, the people are going to come out with the pitchforks and storm parliaments. So they need something like that.
So as this transition is taking place and, war is breaking out on that land and money is fleeing and heading over here, finding safety, is it just going to go into tech stocks and whatnot, or do you expect it to rotate more into hedges like bonds and gold, et cetera?
It will, it will be more towards the private sector. The big capital doesn't really go to the speculative NASDAQ stuff because they lose money on it, and the fund manager is going to lose his job. If he buys, the Dow and it goes down 10%, well, everybody did, so he doesn't lose his job. It's a little bit different that way. The treasuries, yes, that will still initially keep our rates, confined as the bid comes in. All right. But then eventually what will happen is we have to be concerned about what happens, if they did something to Trump or something like that, then you're going to be, it's Katie bar the door, you better get the hell out of the Treasury real fast. But Trump at least understands debt. So I think he also, I think, understands he's talked about eliminating the income tax and things of this nature. Look, income taxes are a Marxist tool, and they're an ancient barbaric relic from when when money was just coin.
I mean, how realistic is it that he could get that change through?
Well, back in the 90s, I was basically the one going back and forth between Bill Archer, who was chairman of the House Ways and Means Committee, and Dick Armey, who was the leader at the time. Dick was for the flat tax. Bill Archer was for the retail sales tax. And I was the one actually going back and forth between them on the whole tax reform stuff. And I was sitting in the office with Dick one day, and he said to me, "Marty, you know cycles?" I said, "Yes." He says, "I can't agree with the sales tax because we're not going to be able to repeal the Constitution. And then you know what will happen. When the Democrats come in, we'll have both." And I said, "Dick, you're right." And I kind of quit at that point. I said, "This is so unless you can really repeal the 16th Amendment and
So yeah, I mean, at this point, that's pie in the sky kind of thinking until they could actually get enough, votes or the right conditions on the ground in order to lead to that. But let's shift over to China. I got a question for you here, Martin. Yeah. So in response to the tariffs that the Trump administration put on China, they responded with the following: "If war is what the U.S. wants, be it a tariff war, a trade war, or any other type of war, we're ready to fight till the end." Then U.S. Secretary of Defense Pete Hegseth, he came out and on Fox News in an interview, he said yesterday that while the U.S. was not actively seeking conflict with China, the country's prepared. So the risks for a broad and durable decoupling of the two economies, that's growing, but it seems like there's something else brewing as well. What do we need to know about the escalating tensions with China, and do we need to be preparing as citizens and investors?
I had a lunch meeting. I won't say with who from Congress, but basically the neocons were telling them that we'll be at war with China, not Russia. And I've said, "You're wrong. That's a diversion. They're telling you to look at China while they're over there trying to start war in Europe with Russia." I finally did get a call back and said, "I think you're right." I said, "I told you, you're just being bullshitted, really." It's China has also now come out because Europe is interested clearly in pushing this war. So they now officially understand, okay, the cat's out of the bag, or they can't hide it anymore, that this is NATO against Russia. And China has come out and basically hinted if that's going to be the case, they're with Russia and will send in troops. And they would be brain dead if they didn't, because what these guys think, okay, fine, we take out Russia, and then who's next? China. So you better, bind together, because otherwise they're just going to say, "Oh, please wait your turn while we destroy one, then we come after you."
Okay. All right. So that looks ominous then. So, all, not just the intel that you're receiving, but the signs, if you're reading the tea leaves, you're forecasting, I don't want to put words in your mouth, you're forecasting an inevitable confrontation, possibly kinetic, with China.
I think China would be the last. I think our problem will start with Russia.
So we will get into a direct conflict with Russia?
They're going to try and invoke Article 5. If China then joins in with Russia, then Trump may have to relent.
Okay. Well, that'll definitely bear watching.
Yes, look, Trump really is anti-war. I did go to Mar-a-Lago for a dinner back in March of 2020 when he was president the first time. And he did impress me then. And I've met many heads of state, and they don't necessarily impress me. All right. But what he said was he wanted to pull the troops out of Afghanistan, but the reason was because he was sick and tired of writing letters to their families, your son died for God and country.
Right.
All right. And he said that he was, he said, what are we doing there? They've been fighting over borders for 1,000 years. What difference are we going to make? And that's why he wanted out. I've also spoken to RFK. He, clearly believes the CIA took out his family. He was also against war. All right. So, and we even had a conversation. What would you do? He asked me to stop Ukraine. I said, you got to cut off the money. So I know where they really do stand.
But regardless of their anti-war stance and desire, you're saying that Europe is trying to drag them in regardless.
Absolutely.
Yeah.
I would be. I would not be surprised if Europe creates some sort of a false flag and says Putin did something. Mm-hmm. You can look on Wikipedia. Probably one of the reasons why the CIA took out JFK, it's on there. It's called Project Northwoods. They actually made a proposal to JFK to kill Americans, blame it on Cuba to justify an invasion. These people don't care.
Yeah.
They really don't care.
Yeah, they will come up with any narrative necessary. All right, Martin, it's been stated many times by many economic experts that the business cycle always wins out. Do you agree with that sentiment? Where are we in the business cycle and what comes next?
It turned down in May of last year. And as soon as it turned down, you saw the central bank starting to low rates. We're going into a global recession, which won't bottom until probably 2028. That's what our computer shows. It will probably be more of a depression in Europe, more of a recessionary trend here. Trump's tariffs, etc. I understand the bulk. A real tariff that he's doing is like 10% or 15%. The 25s that he's doing against Canada and Mexico aren't really an economic war. It's like shut down these drug labs or else. And he's even come out against Trudeau. He says, you're not doing enough. And I've gotten emails from Canadians, and they now understand that, that China has been basically, behind a lot of it. And it's been in Canada, and they didn't realize how much of it, and it was coming across the border. So it's, I would also expect, because Europe is the worst. They are really, joined at the hip, I would say, with Marxism. So it's more like you can't, they think that protecting local jobs is it. And they obviously have never read David, Ricardo, and his theory of comparative advantage. You don't spend $10 to grow heads of lettuce in the middle of the desert when you can buy it for 50 cents from somebody else. And but Europe is very, very Marxist. So I would not be surprised if Trump doesn't do 25% against them, particularly with them beating the war drums. And he's cut off the intelligence. And look, you can look at the Washington Post. They found out that Zelensky knew when Putin was going to cross the border because he gets all the info from the U.S., all right, satellites, etc. All right. And so they asked him, why didn't you tell your people when, war was going to start? And his response in the Washington Post is, if I told them, it would have cost me $7 billion. That's that capital flight you're talking about. All right. So Trump just cut off that intelligence,
So
rightly so.
Yeah. So with all of these crisscrossing headwinds, with Trump placing tariffs and trying to get the changes implemented, Europe trying to drag the U.S. into war, China backing Russia, just all of this going on. What is your forecast for the markets and the economy this year in 2025 here in the States?
Well, the markets, we're not looking at a big crash. All right. Yes, a contraction probably into March, April, a bit of a correction. But from May on, I would be very concerned because Europe is really crumbling very rapidly and they need something.
So you're saying that May on, when you're concerned for Europe and the money's going to flee to the United States, propping up the markets here in the States?
Yeah, most of our institutional clients over there, I've given them the timing. I think they're trying to get the money out first because, look, all I can tell you is that historically, they put on capital controls when the first bullet flies. So that's why you're seeing the gold come here, because it may not be able to afterwards. You're going to have to smuggle it out on a ship or something. So going into May, while domestic analysts may say, "Oh, you're going to get a crash," blah blah blah, and all this other kind of stuff, that will probably be tempered by the capital coming in, fleeing otherwhere. And you're seeing the same thing with why central banks have been buying gold. All right. Don't look at them as an investor. They don't care if it goes up or down. All right. This started with Biden, taking Russia out of basically out of the SWIFT. And then you have Blinken. I don't honestly. Would his mother dropped him on his head when he was a baby or something because he doesn't think straight. It was actually threatening China. If you help Russia, we'll do the same to you. Do you understand what you're even saying? You're destroying the entire world economy. And that's what created BRICS, trying to go, oh, okay, fine, we got that. And so did a lot of other countries. It's like, so we do what Blinken tells us, or otherwise he takes us out of the SWIFT system. So gold is neutral. They don't care if it's going up or down. They're not speculators here. I mean, I've dealt with central banks, for decades. And I've never heard somebody say, gee, should we buy this because we might make money? That's not on their agenda. All right. But gold is neutral. All right. They've been getting the hell out of euros. And during basically also during the Biden administration, they were getting rid of treasuries, particularly China. And moving to gold because it's neutral. It doesn't matter who wins the war at that point. All right. It's always these tangible assets that survive. All right. Your house, if it's worth $100,000, it might, okay, 100,000 dinar or whatever we call the next currency. The difference between gold versus other assets is that real estate's not movable. So you can't pick it up and move to, Uruguay or something. Gold, you can. It's becoming more tricky because governments, you can't put it in your pocket and hop on a plane anymore. Italy, it looks like you have too much gold jewelry on, they pull you over and they weigh it. So they understand that gold is a monetary instrument that can be used to get things out. Where I don't think they did for World War II or World War I. So that's changed. I don't think you can get a suitcase full of gold and hop on a plane.
So essentially, that's why the rush is on right now. Why you're seeing the spike at the COMEX and the drain over there at the LBMA. You're seeing it in real time. They're getting out before these bullets start flying.
Yeah, I mean, because honestly, maybe I'm wrong, but history shows that when that first bullet goes, they put in the capital controls.
And then the gold is locked. You can't move it.
Yeah, and that's why I mentioned this Zelensky in the Washington Post, because he did the same thing. Mm-hmm. If I told him a war was coming, it would have cost me $7 billion. Mm-hmm. He knows the money would have fled. Mm-hmm. Okay, so this is standard. Actually, we probably discovered it back in the 80s because we had a Lebanese bank who found a ledger with all the Lebanese pound being quoted back to like the 1850s. And they asked me if I could do a model. We put it in the computer. I thought something was wrong with the data. And I went back to them. I said, look, something's got to be wrong. It says your country's going to fall apart in 8 days. And very calmly, they just said, well, what currency would you recommend? So they weren't coming to me for that forecast. They were coming to me for the timing. They already obviously saw the money moving.
That's amazing.
And then I saw it the same thing with, we had a Saudi client and he called me up and he said, what do you think gold's going to do tomorrow? Iraq's going to start attacking shipping in the Gulf. I said, you tell me a war's going to start tomorrow? Russia, we became famous for the collapse there. I mean, somebody always knows in advance. And that's what you're kind of seeing right now. The SEC even used our models like that, looking for anybody that bought puts on airlines before 9/11. Mm-hmm. Somebody always has advanced information. And that's what I've learned, since the 80s.
And your models are showing something is coming. Yeah. And so and the evidence with our eyes is the gold is moving. So exactly. This is interesting. Well, hey, everyone, welcome to this fantastic interview with Martin Armstrong, founder of Armstrong Economics. It's been an amazing discussion so far. And before we wrap up here with our final set of questions for Martin, I want to direct everyone interested in the metals and mining sector and investments to dive into our Substack at metalsandminers.substack.com. Join our community, receive a free report titled, If You Don't Own Gold, You Know Neither History Nor Economics. That's a famous quote by investing legend Ray Dalio. Consider upgrading for access to premium content. All premium content provides a comprehensive analysis of global trends, asset sentiment, and deep dives on individual miners for more informed decision-making. But even without premium, there's plenty of free content daily. So visit metalsandminers.substack.com to join us and explore. Thanks again for watching this video. Now, I'm positive that you've enjoyed the conversation with Martin as much as I have. Please let him know. Hit the like and subscribe button and leave a comment below the video. Martin, let's finish off our discussion with what I call a lightning round. I'm going to ask you to rank a few assets as a buy or a sell by giving it a score of 1 to 100, with 100 being an extreme buy and 1 being an extreme sell, and then just give 1 or 2 sentences as to why you take that position. Okay? If you're not following the asset, that's okay. So on a scale of 1 to 100 right now, is gold or a buy or a sell, and why?
Depends about, short term timing. I'm more on the timing side. Yes, I think it's going to be a buy. I would say 100%. Not right today. Give it a chance. As I said, we're looking at May as an important turning point. So
Okay.
going into that period, a lot of these assets may make their correction. All right. Gold is being priced in dollars. Okay. As the dollar goes up, gold may decline slightly, but it's rising in other currencies. Okay. So a bull market is when something goes up in all currencies, not just one.
Mm-hmm.
So when you understand that, you'll see what I'm talking about. It's more of a short-term correction, and then we're looking at really 100% buy on just about everything, really, over here. I wouldn't go buying, European stocks or something like that at this stage.
All right. Well, let me run through these assets. We'll try to go fairly quickly. We'll do it like a lightning round, and just give me a score and one or two sentences. All right. Well, let's go to gold miners.
Mm-hmm.
1 to 100.
In the United States, I would say 100. I'd be concerned about those maybe in Canada. Geopolitically, they tend to be much more in line with Charles Schwab, etc., and they could basically nationalize things.
Okay. Silver. 1 to 100.
Pretty much the same. I think silver would be more of a commodity that you can use for daily transactions, like the old silver coinage. I think because the average person at a Starbucks isn't going to know what a bar of silver is versus a bar of nickel. But a silver coin with a date, they'll know.
That's interesting. Okay, so you're giving that 100, just like gold. Just wait till May timeframe ish. Silver miners.
Same thing. Just stay in the United States.
Okay.
I don't think that they will be a problem here, at least in the Trump administration. But Canada will present more of a risk.
Gotcha. Copper. 1 to 100.
Copper, nickel, zinc. These things go up during times of war.
So you're expecting copper to go up, and so you like it as a buy as long as you stay out of the European area.
Yes.
Okay. Uranium.
It's still, I think, longer term. I would say, at least an 80%.
So you like it as a long-term play.
Yeah.
Okay. Oil.
Oil. The companies are doing very well, even at $75. War, you're probably going to be looking at oil going up quite sharply. And maybe back to the 120 area, as, again, these are things that go up during war. During war, you get the inflationary side. Even during World War II, they put silver in the 5-cent nickels, and the nickel they used for war, right? So you have the wartime nickels that are almost pure silver.
All right, NASDAQ.
I would be a little bit more concerned about the NASDAQ rather than the Dow or something like that.
Is that because
AI
you said
stocks,
earlier it's more of a retail
yes,
environment? Yeah.
So they tend to be much more volatile, because the big institutions won't necessarily be coming in so much. The AI bubble is probably reaching a peak, really. And again, as we move into these geopolitical problems, the big boom idea of a globalization of the economy comes to an end.
So if you had to put a number on it, are you a sell? Are you below 50?
Um, I'm probably at best a 50.
Okay. What about the S&P 500?
There, I think you're looking at more stable. You're looking at a tremendous amount of money in government debt. All right, which is making that transition from government to private sector. And it's got, that's why you're seeing real estate still with a bid in certain areas, not everywhere.
Yeah.
The blue states, people are fleeing faster and furious. So, I wouldn't be buying real estate in California or something like that, or New York,
Or
or
Washington,
even New
D.C.?
Jersey, really. But, I think we got enough people coming to Florida. Try someplace else, please.
All right. So you like S&P, it's stronger. You clearly above 50.
Yes.
What
I mean, again, short-term correction. Then I think you're going to see it rising afterwards for the second half of the year because of capital inflows.
Okay. Let's turn to treasuries. Let's start with short term.
Okay, right now, like I say, mainly because of the move largely from capital moving into this area from externally, but I mean, eventually you're looking at government debt rising. I mean, in interest rates, and so the treasuries tend to fall. Trump is doing a good job in trying to cut as much as possible. But on the economy, I'll say this because most people don't know about it. We did a deep dive on the economic statistics, and we discovered that they count in GDP total government expenditure, and then they count total personal income. They don't back out the government employees. So what happens is you hire a government employee and GDP goes up more than if you or I hire them. All right. Now, that can have a reverse leverage effect. As Trump reduces government employees, the GDP comes down faster.
That's a good point.
So understand most of these economic statistics have serious flaws.
Yeah. And that's been definitely spoken about at great lengths over the last few years. So you sound like you're more favorable to short-term treasuries than long-term. You don't like long-term at all?
No.
Yeah. So you're in what, like under 25 on a scale of 1 to 100?
Long-term interest rates will rise.
They will rise. So you're a seller of long-term treasuries,
Yeah,
but you're willing to hold short-term treasuries.
Short-term, yes.
Yeah.
But your long-term, you have to realize when you go into war, you take the bonds, find 2.75%. Our computer's projecting minimum realistic by the time you get out to 27, 28 is 5%, up to more probable maybe even 8%.
Wow. That'll be interesting. I could see why your computers are your software is saying a global recession tilting on depression. All right. Finally, on a scale of 1 to 10, with each representing a percentage, like 1%, 2%, 2.5%, whatever, where do you see inflation ending the year 2025?
Probably about the same. It depends upon how you're calculating it. All right. That's the real problem. It's like the trade statistics. They don't actually count the number of BMWs or Toyotas at the dock. They're only looking at the dollars back and forth. I used to help the Japanese reduce their trade surplus. We would buy gold in New York and ship it to London. Okay. They don't care what it is. Oh, we sold an extra whatever to, $1 billion went out to London. That's how they look at these statistics. The inflation, I've been talking to some people in Congress on revising it. So it depends, how that's going to come about. But, it's been revised, I don't know, 40, 50 times.
Yeah. But by current methodology, you're thinking it'll be in the same neighborhood as they're reporting it today.
Pretty much. I don't see it go up dramatically.
Okay.
But you have some of them that may try and tweak it up because of tariffs, things of this nature. But it's, realistically, Trump basically saying we're going to drill, baby, drill. These are the things that really impact the normal household. Energy, food. All right. And so you had the climate change people reducing the food supply, and then you have Biden cutting off, energy. I guess only an idiot would do the two things, I suppose. I don't know. Nobody had bothered look to see what that would actually do to the average household.
Yeah, and it was rough for several years, and it still is for many, on the bottom 60 to 70%. Well, listen, I could talk to you for hours and hours, and I want to have you back on sometime soon. There's so much more to cover. Thank you for coming on to Metals and Miners. You've been so generous with your time and your analysis and ideas. Would you share with everybody how they can learn more about your work and how they can connect with you?
We have a site. We keep it completely open. We don't sell advertising or anything. It's mainly for a public service. I had vowed that I would keep that way. It's ArmstrongEconomics.com. You don't have to put in your email or anything. It's we have offices around the world, from actually China to all the way down to Dubai. We're not blocked anywhere. We try to keep it open. I think that the free flow of information, legitimate information, is important. And we're not blocked because everybody knows it's the computer, so it's not biased. It's not going to say, gee, on page 3, by the way, overthrow your government, It just calls it's been correct on every election, whatever, because it just looks at the numbers. That's it.
Well, that's ominous, Martin, based on what you're predicting or forecasting to come.
Yeah, it's not my personal opinion. I don't want to see what's in store myself. I've got grandkids, and but I got to call the shots the way they are. That's it.
Mm-hmm. Well, we appreciate you doing so. This has been a wonderful conversation. And like I said, you're welcome here anytime. And I look forward to having you back on sometime soon. So thanks for being here. And everybody else, thank you for watching. I appreciate it.
Well, thank you for inviting me. Take care.
Welcome to this fantastic interview with Martin Armstrong, founder of Armstrong Economics. It's been an amazing discussion so far. And before we wrap up here with our final set of questions for Martin, I want to direct everyone interested in the metals and mining sector and investments to dive into our Substack at metalsandminers.substack.com. Join our community, receive a free report titled, "If You Don't Own Gold, You Know Neither History Nor Economics." That's a famous quote by investing legend Ray Dalio.